Director del Instituto IFO, que nos acompaña en estos momentos y con quien vamos a analizar estas cuestiones en los próximos minutos. Y le saludamos. Clemens, thank you so much for having us a few minutes. Good afternoon from Spain.
Good afternoon.
Clemens, German government projections show now an economic growth of 0.2% in 2023. It looks like the German economy is withstanding the aftershock of the Ukraine war better than projected. But can we really say Germany is going to escape the recession?
It's likely it's going to escape the recession, but only in a technical sense. Recession technically is 2 quarters where the economy shrinks. And it looks like the last quarter in 2022 was flat. It's likely that the economy will shrink in the first quarter 23, but then we expect a recovery. So we may escape the recession, but only just. It will be it won't be a recession, but more or less stagnation for the whole year. So the burden of the crisis is there. It is just a little smaller than we feared, and that's in particular because of the warmer weather and lower gas prices.
So you talk about stagnation. Is this the most probably scenario for Germany this 2023?
Yes, that's a very likely scenario. So it could be, like the German government said, 0.2% growth, but that's very close to zero. Our last projection was minus 0.1, so it's all very close to zero. Probably stagnation, and we are stagnating at a relatively low level because GDP in Germany is still depressed as a consequence of the corona pandemic. So we're coming from a low level. We have only just reached the 2019 level, so stagnation, but at a relatively low level.
Stagnation, relatively low level. And is the European energy shock over? I don't know if we can say that. We've seen falling gas prices, but is it correct to see this falls as a signal of the energy shock really ending?
I don't think so. It's not over. We now have this mild weather, but the limitations on the physical infrastructure really for gas imports continue to be there. And for the next winter, we will need to fill up the gas stores without gas from Russia. Last year, we still had the gas from Russia until September. This year, we don't have it. And if we think 2 or 3 years ahead, we will need to replace Russian gas with liquefied natural gas, so LNG. And that is maybe 2 times as expensive as Russian gas used to be. So there is a permanent shock for Europe, or at least for Northwestern Europe. We will have to live with higher gas prices for a longer time. And gas is a very important commodity, so it's not over.
And Clemens, due to this energy crisis, some production sectors in Germany have become unprofitable. Chemicals, pharmaceuticals are a good example, with a 15% drop in the production from a year ago. How is this shifting and retooling German industry?
It certainly is a blow to German industry. As you say, it's the chemical industry, which is very energy intensive and which has reduced its production this year, but it's also part of the metal industry, ceramics, pharmaceutical industry, not so much. But overall, a significant part of German industry is energy intensive. And the part of these activities will need to be relocated. And I would say permanently. So if you think about ammoniac production, which is an important product in the chemical industry, this will probably shift to the United States and will need to be re-imported. I mean, this loss alone is something that will not lead to industrialization at a larger scale. The trouble is that this is hitting us at a time where German industry is under pressure anyway. For instance, the car industry, due to electrification, or generally we have this issue of rising energy costs and the energy transformation, and that's why these high energy prices, yes, they are a problem.
And we are waiting for the next price caps. We talk mostly about diesel. It will be on February 5. Could these upcoming price caps worsen the energy situation in Europe?
Yes, they can. If we currently have a scarcity of quantities, really, in particular with gas, not so much with diesel or with oil. But in this situation of emergency, or a situation where you can even end up in a gas rationing scenario, you need to be very careful with price caps, because price caps will lead to falling quantities, and that's not something we need now. It would be wise to postpone that until energy markets have adjusted again, and we are sure there will be no quantity rationing.
And finally, if we talk about China, which role will play? Because as the country is leaving behind the zero-COVID policy and increases its demand, can we expect a big push for Europe and especially Germany?
I think the impact has two sides. On the one hand, yes, more products will be delivered, so bottlenecks will become better. More products will be delivered from China. There will be more export demand if China recovers in the summer. But China will also increase its demand for energy and for LNG, and that will drive up oil prices, energy prices, and also commodity prices for us, meaning inflationary pressures may increase again, forcing the ECB to raise interest rates and so on. So it's a mixed bag, but it's certainly not the case that the Chinese recovery, if it comes, will only help us.
Of course, if we talk about this recovery in China, we could expect more inflation because of these movements in the economic giant.
Absolutely. If China increases its demand for commodities and energy, prices will also increase in Europe, and that will make the inflationary pressure worse.
Clemens Fuest from IFO, thank you so much. Pleasure.
Thank you. A pleasure. Thank you.
Pues nosotros